All right, so welcome you all in the weekly webinar of Week Ahead with Religare Technical. So, as you most of you know that during this webinar we talk about the performance during the week for the key indices, top sectors, losers in the sectoral pack, alongside with the top 5 gainers and losers from the Nifty 50 basket, followed by our view on both Nifty and the banking index and some of these stocks which should be on your radar for the next week for long and short trades. So let's start with a quick disclaimer that the information which we share during the presentation is for educational purpose. It's not trading or investment recommendations. So before taking any decision based on the information shared, please check with your financial advisor. Now coming to the performance or the market moves. So we all know it's been a very volatile week. Means almost around 10 to 12% kind of move on the percentage term. Means from the highs of around 23,300, 330 to 21,200, and then eventually closing around the upper band around 23,300. So it's been a very volatile week. Nifty and Sensex still could manage to end, over 3% higher each. And as you can see on the sectoral front also, all the sectors ended in green, wherein IT, FMCG, auto, media, and realty, they were the top performers. Coming to the top 5 gainers from the Nifty 50 basket, we have one name from the auto space, that is M&M. Then we have a couple of names, in fact, 3 names from the IT space, Tech Mahindra, Wipro, and Infosys. And lastly, HUL from the FMCG space. On the losing side, Adani Enterprise, BPCL, Adani Ports, L&T, and Coal India. So they witnessed a bit of a profit taking from the higher levels and retraced in the range of 2 to 5.5%. So that this is the summary of what has happened. But those who have experienced firsthand, are very clear that kind of swings that we had across the board. Now, after this volatile week, let's see what is markets are indicating. So this is the daily graph. Last time we've talked about on the weekly time frame, to show something else. But this time around, this is important. And why this is important? Because this is what we were discussing, that we've opened around here. Then in the election day, we have tested this red line, and this red line is very critical. This red line indicates the long-term trend, the 200 days of exponential moving average for the Nifty, which currently lies around 21,200 zone. We made a low around 21,280 and then reversed sharply in the last 3 trading session and ended closer to the record high zone. Broadly, on the closing basis, we are still trying to or we can see that it's still respecting this upper band of this channel. So earlier also, we had this session of close above this channel, but the next day we all know what happened. Again, we have finally surpassed this level. Let's see what happens, in the coming week. But the good part is the kind of recovery that we have seen the last 3 trading session. In fact, the laggards like FMCG and IT, which we were eyeing recovery earlier, they have finally started participating. So other key sectors like banking, auto, energy, they were anyways doing well. Yes, they were volatile, but they were participating. But FMCG and IT, they were on the sidelines. So finally, we saw some participation, healthy participation. FMCG index made a new record high. IT also recovered very strongly, indicating a short-term reversal. So keeping that in mind, that we have broader participation now, when it comes to sectoral move and index majors, we expect this tone to continue. But markets are volatile. We have seen such kind of swings earlier also, but they fizzle out. So for buyers, 22,600, That is the key area for the next week. As long as we are holding above 22,600, tone should be positive. Below that, again, the bias would shift from positive to sideways or negative. So 22,600, that's the key area. Upside 23,400, the earlier resistance, which we've almost tested on Monday this week, but we couldn't surpass. So once we cross that mark, then 23,800, 24,000, that would be the upper band for the markets. So tone positive, 22,600, make a break area. Look for buying positions until we break 22,600 decisively. Now, banking. So banking was equally volatile, and as you can see that the gains were limited in banking in comparison to what we are seeing in the Nifty index. It's a weekly graph, but it's a perfect channel that currently it's been trading in. So it also made an attempt to test or retest the upper band of this channel, surpassed the same also for brief, but it couldn't sustain. So going ahead, this 50,600, this area, and then 51,500. That will be the major hurdle for the banking index. Downside 48,300 to 47,400 would provide the cushion. Here, the important aspect is that volatility is much higher in the PSU pack in comparison to the private banking majors. So accordingly, one should prefer private banking majors and select PSUs wherein we have not seen any major dent during the week. So the best way to identify the top performer or stocks, which are relatively strong, is to look for their weekly close, last week to this week. If they could manage to gain flat to positive, from week on week basis, it means they are strong scripts. In case if it is not the case, then one should avoid fresh buying on those counters until they reclaim their previous highs. So that should be the way of seeing stocks, at least for 1 to 2 weeks now, because base formation and otherwise there could be multiple consolidation which we might see. So in banking, private banks should be on the focus. Now let's talk about stocks. What all stocks that one can keep on radar for the next week. The first that we have on the list from the IT space. So IT, as after a long period of underperformance, we have seen this recovery, and this is Infosys, the IT major. This zone, as you can see that in the multiple instances in the past also, we have seen the stock respecting and witnessing a recovery, and this time around also it spent noticeable time within this 1350 to 1470 levels, and finally we are seeing this rebound. So we expect this rebound to strengthen further in the coming week also, and the upper band or the previous swing high close to around 1700 is something that it might inch towards. So first name which one can keep in mind for the next week is Infosys. Second, Granules. So defensives, be it pharma, FMCG or IT, were in the limelight. It's not that the other didn't participate, but they definitely had the upper hand, and Granules a very strong close on the weekly basis with the strong weekly candle, plus the volumes were also upbeat. Stock has reclaimed its record high, so everything looks positive when it comes to the overall trend, and we are now eyeing a newer highs in coming weeks. So Granule is the second stock that we like for the next week. Lastly on the list, from the gas distribution space. So this is a very interesting space because again, like in line with what we were seeing in the IT and FMCG, which were sitting on the sidelines, this theme have also not participated much in the entire move. Good part is that the decline or the distribution which we are seeing in some of these names, that has also subsided substantially. So now what we are seeing is mostly be it IGL, MGL or Gujarat Gas hovering in a very tight range. So like Gujarat Gas also in line with the other counters witnessed very sharp decline during the week. As you can see, this lower wick around below, in fact, 500 levels. But where we've closed around 6% up on the week-on-week basis. So this consolidation, which we have discussed, I guess, a couple of weeks ago also, still valid. And we expect now the risk to reward is still in the favor of further upside towards 680 to 700 zone. So Gujarat Gas is the third name from the list, which one can consider for accumulation or buying in the coming week. So if we sum this up, overall the tone looks positive. There's no doubt about that, because the way we have recovered during the week, across sector participation, IT, banking, FMCG. So tone looks positive, and 23,800 to 24,000 is something that we are eyeing now. When this bias would negate once we break 22,600 mark. Banking also looks positive, but the preference should be given to the private banking major instead of the PSU because they are highly volatile. Among these stocks, we've discussed about Infosys from the IT pack, Granules from the pharma, and Gujarat Gas from the gas distribution name, which one can consider for long trades. So this is all from the presentation part. Now we'll do a quick feedback poll, and then we can start with the Q&A session. So please fill in your experience, and then you can start posting your question using that Q&A tab. And please restrict your queries to the sectors instead of stock specific name, because it's going to be an endless exercise otherwise. So anything particular to any sector which we didn't address during the presentation, we can definitely talk about that. And maybe we can talk about certain themes also which you wish to discuss about. So please quickly fill this feedback, and then you can start posting your question using that Q&A tab. All right, so we can start with Q&A now. Mr. Hitesh, please write your question using that Q&A tab or the chat button in case if you're facing any issue with the Q&A button. You can use the chat button also. Okay, so first question from Mr. Krishnan on which semiconductor stock considered for long term. So again, stock specific is something that we don't recommend, because the idea behind this is for the information purpose, is not trading or investment recommendation, sir. But the entire space, when it comes to auto and auto ancillary is doing well. Again, I would recommend look for the names which are trading closer to their record highs, not the one which are struggling, which are trading closer to the 52 weeks low or fail to see a recovery. So I'll just name few stocks like Motherson Sumi in the auto ancillary space. Then purely for this space, we don't have any counter as such right now, which purely deals with semiconductors and all. So uh, you can see IT counters and some of these companies which are in the process to set for the investment, but look for the fundamental aspects first, means how they're positioned at present, and then accordingly you can take a stance. Okay, so next, Mr. Naga has question: will there be any further correction in software sector considering the existing valuations? So, in fact, they are the one where the valuations are comfortable when it comes to IT space. So that's the reason why we are seeing this, shift in the portfolio. So this move in the IT could be for a couple of reasons that what we are seeing right now. One is the safety net, because market was looking for the opportunity in the sectors or space which were beaten down or comparatively relatively uh, uh, rightly valued. So IT was one alongside with FMCG, wherein we have seen traction. So we feel that the space still have potential to do exceptionally well from the current levels, from the short, medium to long term in all the aspects. Okay, so Mr. Hitesh, I have requested to not to post please stock specific queries, but anyways, I'll answer your queries from the sector specific front that how we are seeing metal as a space. On this query, that metal as a space, we are seeing strength, but they are still volatile. So within the metal space, because the sector is doing well, the index is also placed closer to its record high. Be very selective, and if the view is short term, look for names which are less volatile. So stock like Tata Steel, which have finally made a new record high of late, is a comparatively less volatile counter, and majority of the other names, they are highly volatile in nature. So for a time being now, it's prudent that one can consider Tata Steel and maybe selectively JSW Steel or Hind Copper selectively. Yes. Okay, so we have talked about this. No stock specific queries. Please, I requested earlier no stock specific queries, please, so that we can conclude this webinar on time. And we will have a meaningful conversation. So next. Which sectors to focus? So again, I would say that all sectors are participating. The good part is that as we've shared during the presentation itself, there was not even a single sector on the losing side on a week-on-week basis. So all sectors participating, but yes, IT, FMCG, they have started moving after a long period of consolidation or correction. They have moved up very sharply. Some of these stocks, they have moved up very sharply in both the packs, but still we feel that we have more room for the upside in IT. So IT majors like Infosys, TCS, HCL Tech, then Persistent, Birlasoft from the mid-cap ID name. So this is a consistent name that we always discuss and talk about. So these are some of the names which one can look at from the FMCG space. Marico we have discussed a couple of weeks ago during this presentation itself. Then we have Emami, Godrej Consumers, ITC. ITC have not moved up much, so we have room. So these are some of these names from the preferred sectors. From the pharma space, we've talked about granules. Then we are seeing recovery in Dr. Reddy's also. So these are some of these sectors which one can look at. Okay, what about defense stocks for the long term? So again, the long term I would say if 1 year, 2 year, then it's fine. Less than that, uh, they look slightly stressed after this, phenomenal surge. So they might undergo with time-wise or price-wise consolidation correction as well. So anything less than 1 year, definitely you should, look for, booking some profit off the table and, uh, use any dip to gradually accumulate in the coming week. All right. Anything related to particular sector, we are okay to answer. In stock specific. So again, do you see any specific sectors that get boost considering the new NDA government priorities? So, see, the government has made it very clear during their election times that some of these sectors like green energy, railways, that remains the priority. But this is long term in nature. It's not for 1 year. It's 5 year plan which they have kept in place, and the stock have already moved up in most of these sectors. So for a time being, just on the basis of that, I would recommend not to look for short term opportunity. You might feel disappointed, because even if there'll be news announcement, positive news announcement around those sectors, but short term, because they are slightly stretched, they'll continue to face pressure on rise. So be very selective in this, private PSU space. Okay, so this is something which is not the part of the discussion, bullion gold, but since we closely track gold performance, we'll discuss this because it's something which adds to your overall portfolio. So our view is positive on gold. Even after this phenomenal surge that we have seen in the recent past, we feel that gold has potential to maintain the positive tone in the coming months also. Yeah, the quantum of rise could be gradual now from here on, but the tone looks positive. So yes, positionally, if we talk about, just let me uh, recheck the positional levels, because 80,000 is something that is what we were eyeing in the shorter duration. So yeah, so it's going to be around 70,000. That will be the key area to look at, 17,400 to be precise. If it breaks, then there could be time wise correction consolidation. So around that time, one should look for buying opportunities. So if it breaks 70,400, then 68,000 to 68,000, 68,500 could be the zone where it might retrace to. And it's going to be a good buying opportunity if somebody's planning for long-term investment in gold. Upside 7450, the previous high, and then 76,000, 78,000, 80,000 will be your positional target in gold. So long term, it looks favorable to us. All right. So with this, we have answered all the queries. So thank you everyone for participating and asking these queries. Next week, same time, we'll connect again and we'll discuss about markets performance. Till then, take care. Goodbye. Thank you.